Back to work, the unemployment rate falling below 4% for the first time in 17 years, but job growth was a little weaker than expected. Let's bring in today's panel. Carol Roth, former investment banker and founder of the Future File Legacy Planning System, Paul Aversano from Alvarez & Marsal, and Veronica Dagher from the Wall Street Journal. Paul, I'll start with you. What did you glean from that unemployment report? Did you like it as much as the market did?
I did. I mean, what's not to like? 7.5 years of uninterrupted job growth. I work personally in professional services, which I think added the most jobs at 54,000. A record low or near, in the last 17 years, unemployment at 3.9%. And difficult to explain the lack of wage growth, but I think that's a positive for inflation and interest rates.
Right. I mean, Carol, that's one of the big takeaways is that you look at it came in under expectations, and especially when you're talking about the wage growth. And that's a positive because we had been concerned about inflation and the number of rate hikes we were going to see from the Fed, right?
I think that this is what we call Goldilocks numbers. They were just right. They showed a lot of growth, but not so much growth that we're worried about the Fed accelerating their policy, and not a lack of growth where we're worried about a recession. So this is exactly the type of numbers that the market likes. I think it gets past looking at some of the macro issues and being able to look now at valuations, which if you were looking at things at the beginning of the year versus now, things are starting to look cheap. So it was a really perfect macro report to put that backdrop to allow us to focus micro now.
Veronica, do you agree with that? And what does it mean for the economy?
You know, it was a great report for Black and Hispanic workers. Some of those numbers look really good, the best they've looked in a long time. For the overall economy, though, it's an interesting thing because the market loves the fact that wages aren't growing. Yet if you're a worker like you and me, we're not so thrilled wages aren't growing. It puts companies in an interesting position because they're getting inflation pressure gradually on some of their costs. And so they're starting to say, at what point can we pass those costs off to consumers? They're not there yet, especially since wages aren't keeping up.
Yeah, Paul, do you want to speak to that point? I mean, it's sort of for businesses, which is, who you deal with. They're seeing a lot of different cross currents.
Right. I mean, people are happy that there's less inflationary pressure and therefore less pressure for the Fed to overreact, let's say, with interest rates. But the downside to that is there hasn't been a significant amount of wage growth just yet.
Yeah. Carol, what does that mean going forward? It could mean, there are some that's looking for the peak in the market or the peak in sort of all the indicators out there. Are we at that point?
I don't think we're quite at that point, but we're certainly playing in the latter innings of the game. I certainly think that it's a potential issue, but I think the bigger issue versus really looking at the individual is thinking about what these potential workers are going to be thinking about in terms of finding something that fits their skills. I think that's the bigger issue for businesses right now. They're having challenges in terms of a skills gap. So I think that's why we're seeing some of this lack of wage pressure because the businesses can't find those workers with the skills that they need.
All right. Well, concerns about China had kind of been holding the market back this week, but those concerns clearly eased today. Is that because progress was made by our trade team? They're on their way home from China, or because our booming economy is seen as more important? Carol, what do you think?
I think that obviously President Trump has backed off some of the tough talk. So I don't know that we've made a lot of progress, but obviously the market can only focus on so many things at one time. And this is not in the forefront today. As we've talked about before, obviously, art of the deal versus is it real? I think a lot of people are thinking that maybe it's a little bit more art of the deal and at least feeling good about it for the time being.
And Veronica, I think, again, because of what Carol just said, also because of what we saw not only with the jobs figures, but what we're seeing with economic growth. We have, what is it, a 26% increase in profits this year from the same time last year. I mean, this is a booming economy. We haven't seen a booming economy like this in decades, really.
You know, it's funny because there's a lot of things firing on all cylinders, but it doesn't necessarily feel booming to a lot of the folks on Main Street.
Well, it does today.
It does today, right? It does today, especially if you're looking at your 401k. But you bring up a good point, and we've got growth in the U.S. Global growth overall looks really strong, and so there's some people out there saying, "Is this as good as it gets?" And it's hard to know if that's the case. But this year, in particular, you know, the tax reform has made a big difference for a lot of companies.
Well, Paul, it's not not as good as it gets. It gets better. I mean, that's the great thing about the American economy when it does operate on all cylinders. When you pull back on the role of the government and allow companies to spread their wings, this country just keeps growing and growing. It's one of the few countries in the world that has a history of doing that.
Yeah, you're absolutely right. And I think some of the things I've been reading, that with unemployment at 3.9%, they're expecting even later in the year it could be down to 3.6, 3.5%. So like you said, it can continue to keep humming along.
Carol, Paul, Veronica, great stuff, gang. Have a wonderful weekend. Thank you for being here.